It's Jeremy Williams with the Bannock Real Estate Group, and I just want to let you know we put together these videos because it's really important to us that we get relevant, accurate information into the marketplace as the market changes so you can make the best decisions. If you like the information we're providing, please subscribe. It makes a big difference for us. And then also, if you'd like to see a certain video about a certain topic, make a comment. We'd love to hear from you. With that, let's get into it. Hey, it's Jeremy Williams, broker owner of the Bannock Real Estate Group, and of course it's the beginning of April, and today we're going to go over the market report, what's happened over the last month, and then go into some of the statistics we've seen over the first quarter of this year. Some surprising results. I mean, it's certainly a little different than I would have predicted a couple months ago, and so we're going to get right into it. And I think what's important about these videos and paying attention to the data, if you are even thinking about buying or selling a home over the next couple months, is this information is going to be stuff that you can use to make a smart decision before the rest of the market knows about it. We're talking about results before they show up in the paper or on the internet. And in some cases, those results might not even be accurate. And we'll talk about why that might be. So let's get into the market report and see how we're doing. So let's first start by looking at what's been happening in the first quarter of this year in terms of the numbers and specifically last month. Well, right now we're about 138 houses for sale, which has increased a little bit from the previous months. That's good news for the marketplace. The more homes that are on the market at this point, the easier it's going to be to find the next house. One thing that's also increased is we have 63 sales last month compared to 52 the month before. And most likely that's because of some of the increased inventory has made it a little bit easier to find the right house. Now, one thing that really surprised me when I was looking at these numbers is if we compare this year compared to last year, we actually have 6% more sales right now than we had this time last year. Why is that surprising is if you looked at last year, we had still very low inventory like we have now, but we also had very low interest rates, still down in the 3s and the 4s. So the fact that we're outpacing last year's marketplace is a very surprising stat, and I think starts to tell a picture of what we could expect throughout the rest of the year. So if you've been following our videos, one of the things that I really pay attention to is supply or demand, or what you'll often hear me say is absorption rate. How absorption rate works is it's a comparison to how many homes in the market compared to how many sell each month, so we can get an indication if it's more of a buyer's market or a seller's market. So for instance, the National Association of Realtors says 6 months of inventory is a normal market. So if you're above that 6-month line, it's a buyer's market. If you're below that 6-month line, it's a seller's market. And the further away that you get, the more extreme the market tends to be. So another surprise stat in the marketplace is we're starting to see our absorption rate decrease. So we've actually been decreasing for 3 months right now. We're absorption rate of 2.15 months of inventory, which is still very much a seller's market. We've been kind of waiting for a breaking point where we might see that increase and head towards a normal market. But at this point, as we head into spring and the active market, I don't see that we're going to see many big changes there. I don't see a big flux of inventory that's going to come to the market that might change that seller's market. So one thing to pay attention to is we could probably expect to see prices increase a little bit as we head through spring. Another tool that we like to use to get a better indication of where the market's going is what I call list the sales price. It's an indication of whether prices are continuing to increase or decrease. If you've been watching our previous videos, we've been talking about a normal market. You can expect a list the sales price to be about 97% on average. So if we're starting to see under 97%, it might mean that our market's losing value and buyers have a little bit more negotiating power. And if it's increasing higher than 97, it means that usually prices are starting to increase. Well, a surprising result that we're seeing is we're seeing the list the sales price back up to over 99%, almost 100% for last month. If that trend continues, you can surely expect prices to continue in price as we get through spring into the summer. So one of the trends that we've been following for the last couple of months is we've been seeing a break in the marketplace, meaning that the market is really strong below this price range and really strong above that price range. Usually this indicates the top of one market in affordability and the bottom of another market. So for the last couple of months, we've seen that 600 to 700, more 650 to 700 price range been that mark where it's been a little bit more of a buyer's market at that price range. We are starting to see that come down in absorption rate where it's 4 months of inventory, but it still certainly is a break in the market. That's going to be important information if your house fits in that price range, and you may have to be a little bit more competitive for offering features and benefits for the price than you might in other price ranges. So that's something we're certainly following. I do expect that trend to probably soften a little bit. Part of the reason is there's more inventory in that marketplace, and the reason there's more inventory in the marketplace is that tends to be where a lot of the new constructions fall as far as price range. So we're going to watch that moving forward. Just something to watch right now is the median sales price so far this year has been $575. So $575 means that half the homes that have sold for under $575, and the other half have sold for over $575. So that's also going to be another indicator of where the market's going over the next couple months, of whether people are buying more expensive houses or they're starting to come down in a different price range. So after looking at this data, what does it all mean? Well, we have list to sales price over 99%. We have more than 6% more sales this year than the same time last year, and inventory is still incredibly low. If you're waiting around for prices to decrease, you might be waiting for quite a while. In fact, there's some reports that we might not see inventory loosen up for another year to 2 years, which would certainly keep us on the current trajectory of increased prices. The good news is at 6%, it usually is more of a manageable rate compared to the 20 and 30% that we saw the previous years. So if you're looking to make a buying decision, you really want to make sure you're using the right data and not just looking at the news outlets. For instance, I read a report recently where they indicated that sales are down and that prices are down. Well, it depends on how you look at the data. Part of the reason they report that way is because we're not appreciating as fast as we were that last year, but we are still appreciating. So yes, we're down in the fact that we're not gaining as fast, but we still are gaining, which is very different than losing value. So let's make sure we're using the right information. Please reach out to me if you're looking to make a buying or selling decision. You can reach me at 406-926-6767, and we look forward to talking to you soon.